Let me welcome Aditya Agarwala, Head of Research Investment at Invest for Edu. Hi, Aditya. Firstly, Happy New Year to you and your team. Help us with your take on the autos up front, because it's a couple of counters, Maruti, M&M leading it from the front. Any other stock that is making on your list?
Hi, Srishti. Good afternoon. Thanks for the show, and Happy New Year to you and the entire team of ET Now. But definitely, there are pockets within, I believe, autos which are looking good. Mahindra definitely tops of the list within that pack. In fact, I have a buy recommendation on Mahindra for a target of 450. Sorry, for a target of 3,210. Apart from Mahindra, I think Tata Motors and Ashok Leyland also look interesting to me, because Tata Motors again entered into a good consolidation phase. The risk to reward is in favor of going long at current levels. There is positive divergences that I see with respect to RSI. Could be a slow mover, but I guess it's a good time to latch on to Tata Motors at current levels. Maybe put a stop loss just around 710 on the downside and look for a target of at least 850 to about 900 on the upside. Ashok Leyland, I think, is also some one stock which should be on traders and investors' radar. At current levels, I definitely think it ticks all the check boxes, and one can definitely look at adding position here for a target of 240 on the upside. Place a stop loss somewhere around 210 on the downside.
Dipan, what are some of the themes that you've been working with in the market? I mean, of course, it's been a rough and volatile patch since October, like we've been marking, or even before that, actually, for some of the mid cap and small caps in particular. But having said that, with all that's lined up in the year ahead and in the month of Jan as well, all stacked up with Trump taking over, the earnings season, then the budget, what would be your sectoral biases?
So I think banks haven't done well last year, and this could be the year where there could be improvement in liquidity, as also interest rate cut, and maybe although NPAs may inch up a little bit, the volume of business also could pick up if the overall economy starts to recover, and valuations are still kind of reasonable over there. So I think it's a good trading opportunity within the banks, especially tier two PSU banks. I'm more positive on them than the private sector banks, but that's more of a kind of a short term, maybe few month, 1 or 2 quarter type of a play. In the medium to long term, I want to be underweight banks because it's becoming bit of a red ocean, and the cyclicality also has increased, and the gap between the PSU banks and the private sector banks has narrowed rapidly, and that's not reflected in the valuations. And there are competing products, so the low cost deposits which the banking industry was enjoying for so many decades, right from inception, those are under a bit of a threat because of mutual funds and because of equity markets and entire financialization which is taking place. So, in summary, I think there is a trading play, a trading opportunity in the banks, but medium to long term, I'm not that hopeful.
All right, but now let's talk about some of these pharma counters as well, because of late, this is definitely this sector is definitely doing well. You talk to any technical expert or even the fundamental experts believe that pharma is really in for a good up move. And Naresh, let me come to you, because just yesterday I remember you were putting and discussing about Apollo Hospital, and that stock actually is doing well today. But let's revisit your call on Apollo Hospitals and any revisions in the target price at these levels?
So Apollo Hospitals is finally coming close to that breakout point of 7,400. For the last almost 1 month, there have been multiple attempts around 7,400. The all-time highs are at 7,550. This could go all the way towards 8,000 levels or higher in the short to medium term. So looks positive, and it has not done as well as the other smaller hospital names have done. So it could take leadership in the sector. In terms of pharma, we've seen a good 10-15% move in a lot of stocks, whether it's a Lupin or a Laurus Labs and other names. So some bit of a pause over there. But Dr. Reddy's and Sun Pharma, the two largest weights in the index, still look interesting at current levels as well as on dips.
What's your sense on pharma? Because, we've seen that entire CDMO play is something that the street is quite bullish on. But do you think there is more, meat to this rally in pharma, which has begun for the last 2 months at least? Dipan?
Oh, sorry, I didn't get the question. Is there?
No, I just wanted to understand whether there is, more steam left in the pharma rally, which is currently at play for the last 2 months at least. The street is quite excited about the CDMO place for sure.
Yeah, that's right. I think and pharmaceutical shares have done very well over the last year as well. I would say that a lot of them are well discovered. They are kind of well priced as well. And they have had 2, 3 solid quarters of very good numbers. So I don't think it's like a moving train. I don't want to really enter in these stocks at these levels. But two stocks come to mind, usual disclosure we and our clients are invested. One is Sun Pharma. I think it should be part of a core holding of every investor because of the kind of strategy which they are following. And mind you, it could have a few soft quarters, but the kind of strategy and vision the management has got in terms of developing a specialty portfolio will pay off very rich dividends in the longer term. Another company which we are watching on our radar and we have an investment in it as well is Kaplan Point because of its kind of strong position in the Latin American market and also making very good progress in terms of US sales as well. So these are the two good companies, in our opinion, within the pharma space. But right now, I think with the way the rally is taking place within the pharma sector, it's better to just wait and watch. Existing investors can remain invested, but from a fresh investment perspective, I want to see the December quarter numbers before I make that judgment call.
All right, so those are the top bets at this point in time. But Deepan, talk to us about the real estate pack as well, because I was just seeing the index that has performed really well for itself, more than 30% gain in the calendar year 2024. And just a while back, we also have a report which is actually saying that Mumbai market has registered its highest ever registration in calendar year 2024. The sales have been quite robust, and going ahead, the potential rate cuts are likely to improve the sales in Mumbai going forward. But given the kind of a run-up that we have seen in these real estate plays, specifically the ones focused in the Mumbai market, Deepan, any stock that comes to your mind at this point in time?
No, I think that the real estate stocks are pretty well priced, and the kind of strength which we have seen in the real estate market, Mumbai and rest of India as well, is really quite surprising. I do understand that the real estate market is on a 8 to 10 year kind of a positive phase, but even within that, there could be a few soft quarters which have not yet come, and sales remain pretty much strong. And more importantly, we have seen that the net asset values are growing steadily quarter after quarter because of new projects or higher values in existing projects and good sales taking place over there. So as an industry, it is on a solid footing. Balance sheet quality is the best it has ever been, and companies are focusing on cash flow and collection, which is very positive. So the return ratios also tend to move up. But look, I think these stocks have rallied significantly. And although I'm not selling any of the real estate stocks which we own, I don't think these are levels to buy to get a very strong outperformance.
Right. Okay, Dipan, great to have you in the show, and we'll chat again soon. Let me just get in some closing trading ideas as well. Naresh, what's on your list?
So continue to like Jubilant Foodworks. The stock has again made a new 52-week high today. Clear outperformer in the sector as well as in the markets right now. So looks like this could continue momentum for the next couple of sessions. Stop loss at 728, target price of 750 for BTST, and could be 800 in the short term.
Right. Aditya, what about your stock ideas?
I've got a couple of them, Aisha. The first one is Mahindra. I spoke about it. Through 3210 is the target, 3000 is the stop loss on the verge of a breakout from a downward sloping channel. The second is Hindustan Petroleum. In Petro, I think it's poised for a big up move. So at current levels, that we are buyer for a target of 450 on the upside with a stop loss at 394 on the downside.
All right, so those are the closing trades coming in from both of our experts. But let's also talk about some of these gold finances, because of late and lastly in the last couple of days, Naresh, stocks like Muthoot Finance and Manappuram have actually been showing strength. Any stock that stands out amongst the two, which one will be the preferred bet, or at these levels, will you suggest to like enter afresh?
So I've been recommending Muthoot Finance, and this has been the strongest name in the NBFC space, continues to make new all-time highs. Even when the markets were correcting, the stock did not really see a correction, has done well. So still, this remains a favorite in the whole pack. Could head up towards 2300. So even at current levels, one could actually buy in momentum with a stop loss at 2180. Manappuram, given that it keeps getting into derivative ban and high volatility and gap downs, is something which I would, in the near term, avoid, but the longer term structure could change if it sustains above the 210 to 20 mark. So for now, Muthoot Finance looks the best in the two names.
If you like this video, then like, share and subscribe to ET Now. If you like this video, then like, share and subscribe to ET Now.